Good morning, everybody. This is the Live Market Open for Monday. Happy Monday. It's April 11th. I'm Yochalam Forex Crunch Market Movers podcast. Doing the show as usual for FX Street. As usual, we'll talk about recent developments in markets, see what happened over the weekend, various charts and levels, the next 24 hours, and of course, your questions. If you cannot see the chat box alongside the screen, please go to this address, tlk.io/fxstreet-forex-live-video. Okay, so what's going on in markets this morning? The mood in general is quite positive. Most Asian stocks are up. Even the Japanese Nikkei, which was a bit down, eventually went up. Oil prices are up. Good news. Extension from last week's recovery following the drawdown in oil inventories. Chinese inflation looks better. It isn't still negative on the PPI, but it's improving. Other news over the weekend, a lot of focus on the political arena in the United Kingdom. David Cameron, the Prime Minister of the United Kingdom, is still in trouble. He revealed his taxes. That just opened another Pandora box. He's under pressure from the opposition. And also within his party, he might appoint some of his opponents regarding the Brexit, 2 ministers in his cabinet. So just watch out for any more political developments in the UK. Things are very sensitive towards the Brexit and with all these Panama Papers. Okay, let's look a bit markets and then talk about other events we had yesterday and today, this morning. Let's begin with traditionally with Euro-Dollar. So Euro-Dollar is moving a bit higher. It opened, if you can see here, with a very, very minor weekend gap to the upside. This gap was closed, but anyway, here we have the gap, then we had it closed, and then we had another move to the upside. I would say that this line that I drew last week of 114.10 is not that relevant anymore. The ranges, at least at the moment, are a bit narrow. It's about 40 pips. Euro-Dollar has been a bit frustrating of late. Last week it went up towards the high resistance line of 114.60, but stopped a bit short and then dropped back to 113.35. So these are the bigger levels to watch here. Pound dollar on a recovery path, more or less. Okay, 141.32, 140.50 still remains strong support. 141.75 is resistance. Last week we had a drop under 140.50, which was a triple bottom all the way to the round number of 140, but from there we didn't go too fast. Okay, let's continue with dollar yen. Here the drama continues with dollar yen. We did have it reach a low here of 107.66. Rise last week, managed to recover all the way to 109. The round number worked as resistance, and we're once again back to the lows. Okay, this Asian session we did see it move a bit above 108, but then falling once again. Even dipped to the lowest levels once again, the lowest levels since October 2014, 107.62 or something like that, 63. But it never went too far. It's just another challenge of the bottom. I would not call that a break. Currently at 107.83. Earlier today, just about an hour ago, we had Kuroda, the governor of the Bank of Japan, speak, and he said that they could add more stimulus if needed. Many other advisors of the government, ex-Bank of Japan officials are saying, contradicting things, that the Bank of Japan should act, that the Bank of Japan should not act. Clearly, they're frustrated with the current level of dollar yen. It's not only against the dollar, it's also against the Chinese yuan, which is trading very tightly alongside the US dollar, and also against other currencies such as the euro, the pound, and other currencies. So Japanese exports are becoming less attractive once again. So on one hand, they're frustrated. On the other hand, they don't really know what to do about it. Okay. Dollar CAD. Well, as I speak, it just touched 130 once again. But basically, remains strong. On Friday, we had an excellent jobs report from Canada. The country gained 40,000 jobs and a bit more, 40 point something, and the unemployment rate dropped from 7.3 to 7.1 without a change in the participation rate. So it's of course very good news for Canada. Let's see if it does hold around 130, because this has been a battle line. Okay, further support 129.30, resistance 130.80. When we talk about CAD, we need to talk about oil. We had WTI crude oil extend its gains in the Asian session. It even went above 40, reached a high of 40.30. Now it's dropping once again under the $40 mark. But oh no, after last week, we've been at $35 handle. We are seeing the pair certainly on higher ground. If we zoom out just a bit, we can see here that it's still under the highs, okay, seen in late March, but it's on a big recovery track from the fall. Okay, we're 1 week away from the big OPEC meeting. Sorry, OPEC and non-OPEC meeting in Doha, Qatar. That happens on April 17th, which is a Sunday, this upcoming Sunday. Expectations are low. I would say that with every rise in the oil price towards this meeting, my expectations are even lower, because in this way they have less, when oil prices are higher, they have less motivation to introduce new production cuts, production freezes, to do something. Okay, let's continue with the Australian dollar. Well, above the lows, it sort of found a base at the round number of 75 now. Very, very well balanced. 75.46, 75.33 is some kind of support, and 76 is the next line of resistance. Kiwi dollar, 68.20 remains relevant. We had a big break in late March above this line, reached even 69.80. Then we fell back under the line, another move above, another move under, but it's still, I still see it as a separator of ranges. Kiwi dollar is still better, less choppy, at least than euro dollar. Okay, 67 is low support, 69.80 is high resistance. Dollar Swiss, well, with this fresh slide of the US dollar, we're seeing fresh slide also against the franc, which is more or less trading in tandem with the euro. So here we are at levels, yeah, 95.20 works as some kind of support, followed by 95.50. Euro Swiss gradually grinding lower, but well, so it's not trading at the 109 level, but it's not going anywhere fast. The Swiss National Bank is monitoring the situation right here. Euro pound, we're holding on to higher ground above 80.50. Okay, so keeping a safe distance already from the 80 level, which the cross took quite some time to break above. The high so far, I mean, last week was 81.20, and that could serve as the next line of resistance on this cross. Remember that also Europe will suffer from a Brexit, potential Brexit. It could be the beginning of the end of the European Union. However, Britain has more to lose. In the bigger scheme of things, European Union is bigger, even without Britain, than Britain is in economic terms. And also, well, economic situation is better in the UK, but on Friday we had really poor figures over there. We'll mention them quite soon. Euro yen, well, the yen is unstoppable, so we're seeing the pair fall as well. 124.20 is resistance, some kind of support here at the 123 round level, followed by 122.50. Okay, and the dragon pound yen 152.24, we found some support here at 151.80. Okay, resistance at the previous support line of 156.40. Okay, so that was the sort of roundup of regular charts. We can of course always return to the previous charts, and you're welcome to ask questions about other charts as well. So, good morning, everybody. Good morning, Pan, Jake, Fabian, Luca, Ralph, Jax, Ed. Now, let's see if you have any questions. Well, you do, because I mentioned all your names because you said good morning and also asked questions. Think they hope the rumors alone will get the market to turn. I assume you're referring to the Japanese yen. Sorry, I wasn't looking earlier at the your question. I assume you're talking about the Bank of Japan. Yes, they always prefer verbal intervention. All central banks prefer verbal intervention over really having to act, okay? Because it's better to keep the powder dry, the tools in the shed, whatever you want to call it. Yeah, thanks. So, so the Bank of Japan would certainly not like to intervene. I think they also feel a bit clueless, a bit helpless, a bit unable to really act at this moment because they've been defied by the markets this year so many times. They set a negative deposit rate. It helped only for a few days in weakening the yen. Then they talked once again. They made some very small interventions. We've seen these spikes on the charts. It did not last too long. So it's very hard to catch a falling knife. So perhaps it's better just to talk and in the meantime try to find some better way to intervene until the atmosphere changes a bit. And it's always easier to intervene when the market is with you. When dollar yen is going up or the yen looks a bit weaker, it's easier to hit the yen when it's down. Okay. So another question from Ed. Austria enacts bail-in. Who's next? Italy. Austria officially became the first European country to use a new law under the framework imposed by the Bank of European Recovery and Resolution Directive to share losses of a failed bank with senior creditors as it slashed the value of debt owed by HETA Asset Resolution AG. 54% haircut. That's a lot. Yeah, more bail-ins can come in. I live here in Barcelona and, of course, have a bank account in a Spanish bank. I don't know, maybe it's not the best thing to do. We should have it in a British bank, but maybe that will suffer Brexit. I don't know. We had the bail-in situation. The talk about that began back in with the crisis in Cyprus, which began in March. Well, erupted in March 2013. Okay, so then we had. At the end, it was canceled, but the idea was that people with deposits in banks would see some of those deposits going towards saving the banks. At the end, the idea was scrapped. Okay, but then we had Dijsselbloem, Jeroen Dijsselbloem, the head of the Eurogroup, which was new at his job. He gave an interview to Reuters and the Financial Times. I remember everything very clearly. And he said, yeah, well, bail-ins, we're going to do that next, okay? Then he had to retract it. His comments were clarified, but we know now that, we already knew before that bail-ins are part of the deal. And now Austria did that to a small bank. In Italy, the situation with the banking system is worse, especially the smaller banks. And the big issue is Monte dei Paschi, forgot the full name, but Monte dei Paschi. And perhaps other banks there are in trouble. Also here in Spain, they did do some kind of bank bailout, but the situation is quite loose. So I'm sure we'll hear more about that. In general, we heard about Deutsche Bank a few months ago, and that their exposure to commodities could hurt them. Remember that the big Greek bailout of 2010 was putting government money and IMF money to save to pay Greece's debt and basically to help European banks that were loaded with too much Greek debt and they were in trouble. So the situation remains quite fragile. It's personally worrying also for me. the impact on currencies at the moment is none, okay? But it could always erupt. Each time the European debt crisis is always, you've heard this before, there's a can-kicking exercise, and each time they don't really solve the problems, they take some half measures. Hopefully, growth will happen later on. With growth, all the boats will float, and things will improve, and banks will get out of trouble, and sovereigns will get out of trouble. But these crises can always erupt when you don't expect them. The situation, by the way, in Greece is also far from being resolved. Okay. Monte dei Paschi di Siena. Okay, so that's from the town of Siena. So the expected law basically makes some... Yeah. Yeah, so things are very complicated. I can see why many Brits are angry with the European Union and all the regulations and all the incompetence of solving problems. Will the UK be better off without the EU? I doubt that, but that's an ongoing argument. Okay, let's continue. Answered some questions and looked at some charts. Let's continue with roundup of recent events and that we had in recent days and what's coming up today, very light days. So we talked about David Cameron's troubles. He inherited money. I think the latest scandal is that his mother transferred money from the estate in a way that made him pay less tax. Anyway, I know that the Scottish National Party, they all revealed their tax returns. Labour, I'm not sure what's going on with their Labour is keeping up the pressure. Jeremy Corbyn, the very controversial leader of Labour, for the first time has better approval ratings than David Cameron. I don't know if David Cameron will eventually resign. It's a bit too far, but you never know. And it's very sensitive, not because, everybody cares all the time about British politics, but because of the Brexit topic. Okay, so perhaps with David Cameron's personal scandals, more Brits will likely just vote against him and vote for Brexit. We've seen that the Dutch people voted against the association agreement with the Ukraine. I'm not sure they really care about this agreement, but it was sort of a vote against the EU, the recent policy, the recent troubles. So let's go back to Friday. On Friday, we had UK data looking terrible on all fronts. Falls in manufacturing, industrial output, trade balance. I was talking about all figures need to go in one direction, and that happened. We had all figures coming out worse than expected with downwards revisions, and the same went for trade balance, which now the UK is in a worse situation. Okay. Just before we move on, did Governor Kuroda speak earlier? I cannot seem to find anything on the speech. Well, yes, he did speak earlier, and he said that they could introduce more stimulus. Now, let me try to get the specific words. Could be more full to quote. They won't hesitate to add stimulus if needed, said the governor of the Bank of Japan. Nothing that we haven't heard before. Of course, they'll monitor the impact of markets on economy and steer towards the 2% inflation target. They expect inflation to pick up, and that the economy is still growing nicely. Basically, nothing we haven't heard before, okay? See if you have another question here. AUD is the weakest and NZD is the strongest now. Am I right? No clue of JPY. Let's look at the charts and the percentage of change. Well, it's quite a calm morning, I would say. The yen is this. I think for me the main story remains the yen because it's sort of frustrating the Bank of Japan and reaching lowest level since October 2014. Yeah, the Kiwi also stands out with big gains against the US dollar. Well, now with this level I mentioned before, 68.20, but it's only 20 pips, so I don't think it really stands out. Yeah. Anyway, what else do we have on Friday? Well, I mentioned this better than expected employment report in Canada. Really good news. Over the weekend, there were doubts about the accuracy of this report, but I think it's still good news. Most of the jobs added in Canada were full-time jobs, okay? We also heard from number 3 at the Fed, Bill Dudley, president of the New York Fed. Contrary to some of his colleagues, he is 100% with Yellen on the very, very dovish stance. And his word, Yellen's words, of course, they have more impact. It didn't, well, it contributes to the ongoing weakness of the US dollar. Of course, when Yellen said those things out loud, it was much more impactful, not the echoes from Dudley. Okay, and we have the independent NISR, I don't know how it's pronounced. Anyway, no, it's initials. An independent think tank in the UK. They see growth in the past 3 months, that means Q1, at a slow rate of 0.3, slower than the official figures for the previous quarters, okay? The pound isn't suffering too much, still holding on with all the troubles. Bad figures from manufacturing trade balance and from this report and political uncertainty. Well, it's doing okay against the US dollar, but not so good against the euro nor the British pound. Okay, we had more details, more data. Chinese inflation came out 2.3% on CPI and 4.6 on the minus 4.6 on the PPI. It's slightly, sorry, slightly better than expected. Okay, nothing to be cheerful about, but not as bad as it used to be. It was under 2% on CPI and minus 6% on PPI in the producer price index. Kuroda, we mentioned, he said they will not hesitate. So far, we do see them hesitating in markets, okay? Other events for today in general, it's a light day, but let's talk about a few things. We have US Treasury Secretary Jack Lew speaking about the economy, about the global economy at 12:30. He speaks a lot, of course, as a politician. That's his job, but his speech could be a bit more specific. Perhaps it could move markets. Bill Dudley talks again. Remember, when central bankers talk too often, the second and third and fourth speeches have less of an impact. And Australian business confidence at 1:30 GMT. Another event we have today is this Fed meeting, this sort of unscheduled Fed meeting. They do it quite often, I think. I mean, it's not that rare, but they released an announcement, I think, on Thursday that today they're going to meet under expedited regulations. It has a sense of urgency to that, making it a bit more, I mean, for perhaps they're about to announce something big, but these were mostly rumors, okay? That because they're meeting in a sort of urgent manner, they're about to announce something. I read that they had a similar meeting in November, just before the rate hike in December. So lots of rumors are going on that the Fed will announce something, a change in policy, a change in those discount rates. I don't think there's going to be anything, but watch out for, and it's a closed meeting with no press conference expected, no statement. Okay, that's why I'm mentioning it only now. I don't think it'll be that important. It's supposed to be somewhere in the afternoon in Europe, morning, noon in the United States. So it does appear on your calendars, but no, there are no details really available. They are expected to talk about the discount rates. I'll show you the FX rate calendar here on Forex Crunch. So you see this Fed announcement doesn't have a specific time, but you can see that it's somewhere in around 4 p.m. here in Europe. That means around 2 GMT, 2 p.m. GMT, somewhere in the afternoon. Not much. There aren't many details about it. Worth mentioning, perhaps we'll have some kind of rumors coming out. Maybe they'll be moved more hawkish, more dovish. I don't know. Anyway, no statement is expected. My expectations are that it will be a total non-event, but it still stands out on the calendar, also on other calendars. There are rumors about it, so I think it's worth mentioning. Okay. Yeah. Any questions here? Yeah. Do you remember what type of announcements they made on previous unscheduled meetings? Well, they just didn't make any announcement. That's why it could turn into a non-event. Now, I've seen that also in November they made a similar move. Okay, a similar unscheduled meeting, and then in December they raised rates. But we already knew from the scheduled meetings that they're above. I mean, from the October meeting, they already told us at that point that they're going to raise rates. So, sorry, showing you the wrong thing. Yeah, sorry about that. Let me made a mess here. Yeah. Anyway, yeah. So this is the right screen to share. Okay, you see the Fed announcement. Sorry, I shared something else beforehand. Anyway, somewhere between 3:25 and 5:30 p.m. here in Europe. That means between 1:30 and 3:30 GMT. Okay. So maybe this time they're preparing something else for us. Any trading ideas for this week? Asks Horace. Well, we're seeing a general trend of a weaker US dollar. Okay. This could continue for quite some time. I think it's a bit exaggerated. I think that inflation figures this week could be better than expected. Okay. Well, at least not as bad, reminding us that the Fed is so worried about inflation, and inflation is not really the issue. Also, if you noted in the meeting minutes, they talked a bit less about inflation and a bit more about the global economy. Okay, so maybe we'll hear regarding the global economy from the Fed today, something from Jack Lew, Treasury Secretary, about the global economy. What else should we mention? Any trade ideas for this week? Well, you made a preview for this week's events. We have the Chinese GDP numbers. So I believe that we should have more. Australian dollar should be a bit more interesting this week. Where will it go? I think it'll be expectations are a bit low, and we could have Chinese figures giving sort of a lift for the Australian dollar. So, of course, this is not trade advice, but perhaps the Australian dollar, after some consolidation, could rise on its employment figures from Australia this week, Chinese data. Things are looking a bit more positive for Australia, for China, and looking a bit worse for the US dollar. So even if the US dollar can recover, perhaps the Australian dollar has some kind of edge. And I remain bearish on the pound. Each day we have new revelations regarding David Cameron. Each day we have growing fears of Brexit and things like that. Okay, more questions here. Fed will release minutes on this meeting weeks after, not that I know of. So this is sort of a closed meeting. Maybe we'll have the meeting minutes of this meeting in 5 years or so. Again, I expect a total non-event, but you never know. No, it's a new office, just a different room, because my office is occupied by guests, my home office, so I'm working in another room. Why do you think Brexit is hitting the pound but not FTSE? Well, it's a good question. I think many stocks in FTSE FTSE is composed out of various different stocks, and they're just reacting to their own particular news. So if the situation is better in specific regarding specific stocks, if it's mining stocks, for example, they were hit so hard by the fall in oil prices and copper prices and iron prices. Now they're recovering. So it's Glencore, Rio Tinto, all these that are traded in London. They're looking a bit better. Okay, banks are firing people, and of course, when companies fire, their shares go up. That's how it works. So these could be some kind of explanations, but yeah, I just don't follow the FTSE that closely. Pairs to watch for today, with the really, I think the yen, dollar yen remains. In terms of indicators, we don't have too much, as I mentioned. So dollar yen remains interesting because all the speculation in will the Bank of Japan act or not, will the markets continue defying the Bank of Japan? It can go both ways. I see currently markets still having the upper hand against the Bank of Japan, so perhaps we haven't seen the lows just yet. Okay, the Bank of Japan seems a bit helpless. On one hand, their hands are tied because of the G20 meeting. On the other hand, G20 commitment, not to intervene. On the other hand, they're frustrated at the moment, and the market is taking advantage of that. I think it could last a bit longer. So this is my pair to watch. Let's see if there are other events that I didn't mention. Other events? No, let's, what time is it? Let's mention a few more events and more questions are welcome, more events for the week. As I said, today is a slow start, but things are getting warmer later on. So we have UK inflation figures tomorrow, very important for the pound, for the Bank of England. On Wednesday, we have retail sales in the United States, top tier figure. In February, we had a great retail sales report. For January, that marked the bottom for the stock market crash. Later on in March, we learned that it wasn't actually that good. The figures were revised to the downside. Anyway, it's a key release. Also, another thing that is a talking point in markets is that the US economy has slowed down quite significantly in Q1. Okay, Q4 2015 was eventually not that bad, 1.4% annualized growth according to the final figure, but Q1 looks worse and worse. This is a report, retail sales for March. If it's a big disappointment, you'll hear more and more talks about an outright recession in the United States, and then no rate hikes at all, but even a reversal. I am still optimistic about the US economy, but we'll have to wait and see until Wednesday. Retail sales, PPI. On Wednesday, we also have a big day for Canada with the Canadian rate decision. No changes expected because the government introduced stimulus. And oil inventories also impact, of course, the loonie. Thursday is a very busy day. We have a focus on Australia, Australian jobs report, Chinese trade balance, then a rate decision in the UK. No changes expected, but the meeting minutes perhaps will show more worries about Brexit. And US inflation figures. Let's see if inflation remains surprisingly strong and not as weak as the Fed fears. And on Friday, we have, lots of figures from China, focus on China, GDP, industrial output, and the US consumer sentiment for April to give us some news about that. Okay. Let's see if you have any more questions. Euro yen is risk on or risk off? Well, euro used to be a risk, safe haven currency like the yen until not that long ago. Now it's a bit mixed. So I think euro yen, if it's risk on, euro yen goes up. Risk off, euro yen goes down. But these risk on, risk off moves are a bit more mixed. It's not doom and gloom versus happiness. It's more complicated now. I mean, in comparison to the beginning of the year. Was there a commitment from the Bank of Japan not to intervene at the last meeting? What's preventing them from intervening? Few things are preventing them from intervening. One is that in the G20, they committed, well, everybody sort of committed not to intervene directly. Of course, with QE, negative rates and things like that, central banks are certainly having their impact, and they certainly have their desires for a weaker currency. US does it, Europe does that, everybody does that, okay? But that's only part of the story. But Japan is a big country, and intervening directly is sort of a no-no. It doesn't mean they're not doing it, but they're watching their steps very carefully. That's one thing that's preventing. The second thing is that these interventions are usually very short-lived. They're not successful, really not successful. So why intervene when it doesn't work? Okay, you'll have to try a bit harder for that to work. What else? Yeah, I mean, those are the main things that are preventing them from intervening. Another question, can euro dollar go back to 112 this week? Everything's possible. We would need some bold statements from Draghi. Draghi is not expected to speak anytime soon, but or anything like that, or a really stronger US dollar on the back of inflation or retail sales. So yes, it's possible. Currently, the market's bias is certainly negative against the US dollar. Okay, maybe they now finally understand it only works for them and the trend resumes. Yeah, exactly. All right. So, yeah, I think we can get to the wrap up for today. Just see if you have any more questions and yeah. So this is the wrap up for the live market open for Monday, April 11th. What's going on in markets? Well, currently the atmosphere is relatively positive. Most Asian stocks are on the upside. Oil is going up, albeit be above, under the highs. Chinese inflation looks better than it used to. Lots of political talk, not in the US, about the primaries. New York primary is only 1 week, well, it's in a week from now. But in the UK, David Cameron, the Prime Minister, is in trouble. And the fear is that his personal tax issues could turn into a vote against him in the Brexit referendum. And that's one of the big talking points. Data on Friday, UK data was terrible. It's quite surprising how the pound holds up quite well against the US dollar, well, but not so well against other currencies. On all these things, big falls in manufacturing, industrial output, trade balance, GDP forecast, everything, including downwards revisions on manufacturing and trade balance. Good news from Canada, employment advanced 40,000 jobs, and the unemployment rate dropped to 7.1. We heard from Dudley, number 3 at the Fed, that he's quite dovish, wants to move very, very gradually, more or less echoing Yellen, not taking a more hawkish stance like his colleagues, but taking the side of Yellen, and the doves are firmly in control. This morning, we talked about Chinese inflation. We had Kuroda speaking earlier, saying they will not hesitate to add more stimulus if necessary, but the Bank of Japan and the Ministry of Finance in Tokyo seem a bit limited at the moment in what they can do. They're a bit frustrated with this stronger yen against the dollar, the yuan, and other currencies. Later today, we have a speech by Treasury Secretary Liu about the global economy, then Dudley. And another thing that I mentioned, there is this sort of expedited Fed meeting behind closed doors, no statement, no press conference, and probably a non-event as well. There are rumors that because in November they had such a meeting, unscheduled meeting ahead of the December rate hike, that this time also they're about to announce big stuff either now or it's a preparation for the upcoming decision in April. I still suspect it's a non-event, but watch out for some moves around 2 to 3 GMT. Not moves. If something will happen, and again I think the chances are low, it's supposed to be around that hour. Okay, and at night we have Australian business confidence, also could be a market mover. Let's look at the charts. Well, the US dollar is gaining a bit of ground in comparison to the beginning of the show. Euro dollar in the wide range of 113.35 to 114.60, currently in a narrow range. Pound dollar is has critical support at 140.50, currently above this line, and 141.75 is resistance. Dollar yen remains on low ground. 107.63 is the lowest since October 2014. Let's see if we break below this line. Perhaps the Bank of Japan will intervene at 105. Some market participants expect 109 is resistance. Dollar CAD hugging the 130 line, still enjoying the better than expected jobs report. Higher oil prices, not at the peak, but far from the bottom. And 130.80 and 129.30 are lines to watch. Aussie dollar holding above the 75.30 line, 75 further support, 76 and 76.40 are next lines of resistance. And the Kiwi dollar, 68.10 at the moment. Looking a bit better than some of its peers, but not going anywhere fast. Okay, 68.20 is a line, a separator, and we have resistance at 69.80 and at support at 67. Okay. Let's see if you have any more questions, and then we'll head off to the sunrise. Dollar gain because of CHF push. Let's look at the Swiss franc. I don't think we're seeing any big moves here. No, I can't say it's something Swiss related, at least not now. Okay. Remember the Swiss National Bank. Jax knows I'm a fan. They intervene in markets a lot, and they want also a weaker Swiss franc. They say this out loud, that they'll continue intervening. Currently, Euro Swiss is grinding its way down. They don't have a specific target, they do, but they will not tell us. Anyway, if we fall a bit more, I believe we'll bounce back up, thanks to the intervention from the guys in Switzerland. Okay, so that's it for today. Thank you very much, everybody, for coming. It's a slow start to the week, but I'm sure it'll become more exciting with every day that passes by. We'll be here, of course, tomorrow, as usual, at the same time. We'll talk about what happens today in markets, see if this Fed decision was really a non-event like I expected, or maybe something else. And we'll be here tomorrow. So that's it. So wish everybody all the best today in markets, and see you tomorrow. Thanks and bye bye.